Hello and welcome to another update video about Sandbox. We haven't covered Sand for a while now, but really there was no need. Nothing changed. The wave count didn't change. I didn't even move them. I just moved the labels back into place a little bit. But overall, yeah, nothing has to change. And I added the potential targets here for a third wave to the chart. I have to say, this is not a very clear chart. At best, in my opinion, a diagonal pattern. That would be my interpretation, okay? Or a large ABC. So it's not an impulse. A few messy structures here, a lot of overlaps. Surely you can probably find different interpretations for that, but I rather warn. With regards to warning, I'm not saying I'm bearish. I just mean that if, with diagonals you get these corrective structures in the subwaves. However, we also have some clear levels to watch that we have identified and that we want to talk about in this video. First of all, the main bullish support level that we already talked about in the last video, that is the 78.6 retracement level that you find here on the chart at 33.4 cents. And this level, we did say, well, as long as this level is holding, there isn't really a need to go bearish on the Sandbox or Sand, okay? And the Sand token, really. So that level obviously wasn't even broken or tested. So that's good, Not saying we needed to test it or anything. It's simply the line in the sand between bearish and bullish, which is indicated by the red arrow there. So a break below that level at around 33.5 cents would indicate that we head to new bear market lows, but we are well above that, all good, okay? While it's good to be cautious whenever we're dealing with a large ABC structure or with a diagonal, it doesn't mean it's bearish. So then it's possible that yellow wave B is, for example, in the yellow count, we're dealing with a diagonal pattern. So we had 3 waves up in a wave 1 as an ABC structure, which is normal in a diagonal. Then a wave 2. So 3 waves up, 3 waves down in wave 2. A possible 5-wave move up in wave A. Then a B wave pullback. And this could be the start of a C wave rally now. Then we should still get another 4 and another 5. So basically just 1, 2, 3, 4, 5, and the subwaves are ABC structures, which I've called out separately in the third wave. You'll often find that in the third wave, the ABC structures are very well defined. So that's what I'm watching. And what could we highlight as a key target for a third wave? Normally, I want the target to be minimally, it's the 1.236 extension at 70.2 cents. Keep that level in mind. First ideal target, 75.8 cents. But in addition to that, we can check if we get some confluence by measuring the length of wave A. We go to the low of wave B. And then we are watching normally for the 100% extension level. That's the A equals C target, where we say they often have the same length. And that's at 78.5 cents. So very, very close to that 75.8 cent level, which is the first ideal target for wave 3. So between 75.8, 78.5 cents, there seems to be some confluence, right? So it seems like we're entering a resistance area above 70 anyway, because that's where the minimum target sits actually. But could go a little higher, but then we should get some resistance there. And as soon as we reach the minimum or ideal target for wave 3, I'm going to add another support area for wave 4. And then wave 5 should end 1 or 2 fib levels higher than the third wave top. In an alternative scenario, we have a B wave here, white wave B, okay? This is probably what would come into play. So it could be either already unfolding now. We will see that if the C wave is impulsive or the structure more clearly suggests a 5-wave move up, because that would be the C wave. But in terms of targets, I don't think they will be much different. Or if we get another break below the last swing low, so if we see a break below 42 cents, that would be a signal that we can still explore a larger correction in wave B. So basically A wave to the upside, then an A, B, C structure in wave B, and then we could get a C wave. But again, then the 33.4 cent level, that important marker here on the chart, will be relevant again. All right, so that will remain relevant actually. So even if the B wave extends, it should really ideally not break below that 33.4 cent level. So we can keep it simple and say that against that level, we can focus on higher prices. And in the very short term, as long as above 41.8 cents, the last swing low, the 6th of February low, we can focus on higher more directly with the next minimum target of 70.4 cents, 70.2 cents, and the first ideal target of 75.8 cents. That's my update about Sand. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.